Well, hello. It is Friday, June the 3rd, 2022. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee. And before we get off into the show, I just want to send out a congratulations to the UT Vols men's baseball team who won the SEC championship for the first time since 1995 and the fourth time since the program began. Now let's get off into that middle segment. As with anything we bring to you from the internet, in a status chat you will find the full link to that article or video, whatever we brought to you, over in the description of the status chat in which that thing actually appeared, so that you can read the whole thing. We usually don't read it verbatim or go through the whole 9 yards, but we'll talk about it. Let's see what we got on tap for today. Well, today we have something from Fortune magazine. This is from Lance Lambert today at about 10 a.m. this morning. Finance, housing is the subject. And here he says, this might be a housing bubble, says Dallas Fed economist. Here's an exclusive look at the latest housing market analysis. Now, I think largely what he goes on to say, have you ever heard that Miranda Lambert song, something bad about to happen, something bad about to happen? Well, I think they're talking about something like that. We've just have enough people that say this can't go on forever, these massive growth in values, and maybe we'll adjust to some of that here in this article. But our area, I want to remind people, our area may turn out to be the number one area in the United States regarding certain metrics that we would use. And as long as people are fleeing these blue cities and states and coming here to our Middle Tennessee, our lovely area with no income tax, and they're loving everything about that. They're loving our lower fuel prices and everything we've got. We're still suffering inflation just like the rest of the nation is. It's just we have a better management system in the state of Tennessee because we have a balanced budget amendment. I would dare say if we didn't have that, we'd probably be overspending too if we could legally do it, but we can't, so we don't. So we're automatically a very attractive place for a lot of people, and we have a surplus. Now, let's go back to see what the Fortune magazine guy says, because they're quoting someone else, someone at the Fed. Let's see what they have to say. Back in March, Economist at the Federal Reserve Bank of Dallas put the real estate industry on high alert when they published a paper titled Real-Time Market Monitoring Finds Signs of Brewing U.S. Housing Bubble. We don't like that word. It's one thing for Redditors on the Rebubble board to pontificate about housing bubble theories, but when the Federal Reserve Bank engages in bubble talk, that's alarming. And we already hear that, I think Janet Yellen this week said that she misunderstood how inflation works when I think they were trying to call it transitory. You simply cannot pump in like 25% of every dollar we have floating out there in the market inside of a year or so, diluting the wealth down, so to speak, and not cause inflation that's going to last for a long time. What's going to happen? I don't know. I hope you're secure. I am, but I'm finding my future is going down because my rate of savings, which was perhaps adequate to get me through, and now becoming look quite more iffy. Honestly, when I think my food prices might have doubled, I've watched restaurants and things go from the two Whoppers for $6.50 or one Whopper deal for $5. Now they're up to $10. Gas is way more than that. Propane is way up. It's inflation. Everybody knows it. Everybody feels it. Let's get back to our article, see what they say. Now remember, I have told you if we were to have a little cresting off of the top, we're the destination location. As long as the big blue wave is swamping into Middle Tennessee, we have the demand to keep our values up. Okay? If we can do that, we will survive. Maybe we tread water. If it gets bad enough, we tread water. But we will do okay. We did okay in 2008 and through 2010 is about a 2-year period. Everybody quotes '08, but it's really a long period there, a couple years. We did okay then. We'll do okay now. I think even better because of our demand. Now, let's go back and see what we got going on from Mr. Fed and what he has to say. That Dallas Fed paper found that U.S. home prices are once again becoming detached from reality. They actually say underlying economic fundamentals, but they're getting detached from reality. However, if a housing correction does come, they wrote, it's unlikely to be another 2008. partially because we have Dodd-Frank, and a lot of the stuff that we were doing were not good economic policies. We were starting to have some social justice attached with home ownership, and we were selling people houses they have really no hope of being able to sustain, and eventually they stumbled and fell out of it. I personally don't like that. I would rather help you do it if it took you a little while to wait to get it done and get it done right, as to sell you something that if you're at risk of losing. It takes all the joy out of it, and it can make you feel terrible for a long time forward and ruin your career. It's just not good to sell somebody something they can't afford, and I don't believe in doing that. Now, here we go. Fast forward to today. The Dallas Fed report, which uses data from the fourth quarter of 2021, is already outdated. That was when they said they thought we might be on a bubble. The first 3 months of 2022 was arguably the hottest quarter ever recorded in the housing market. And on Tuesday, we learned that year-over-year home price growth hit an all-time high of 20.6% between March of this year and the year previous. While things in April and May finally began to cool down, home prices still remain way above the levels hit in the final months of last year. Here's the thing. Do not expect prices to trim down until inventory shoots up, where we have a significant overabundance of inventory. Then you'll see prices start to come down. But as long as we're still in that 1 month to turn a house around, it's not going to happen. Not in my estimation. I could be wrong. But my opinion is it's just not going to happen as long as we're in like a 21 to 30 day turnaround. A healthy market is usually about 60 to 90 days, and we're right now at 30. So I think for our market to really see something, we'd start have to see inventory lingering about on the list for more than 90 days. I think we'd have to start seeing it really protract out before we have any kind of real serious problem, because people want to come here with our balanced budget and our fairly decent roads and our just enough of winter to make you love summer and just enough summer to make you wish you had some winter. So we just have it all here in Tennessee. Now, here they identify the guy. His name is Enrique Martinez Garcia, if I pronounce that correctly, a senior research economist for the Dallas Fed, for his thoughts on the housing market and to see if the bank would provide Fortune magazine with an updated analysis. Because remember, it's already outdated because that was last year's tail end data. All right. He says this might be a housing bubble. The evidence suggests it looks like a housing bubble, a little bit like a duck. It walks like a duck. It looks like a duck. It certainly might be a duck, Martinez Garcia tells Fortune. While he won't go so far as to call it a housing bubble, he says it's time to raise awareness for the potential risk that housing possesses. Okay. So just like everybody else, you've heard me talk about it. In one way we've got people saying, I'm waiting for a bubble. I'm waiting for that bubble to burst. And I tell them, if the bubble bursts, the economic situation that's involved that would burst that bubble, how are you going to be faring in that economic time when whatever caused the housing bubble to burst? Do you think you'll be in a position to capitalize or to pick up on a house? So that's like wishing for an airplane to crash, miss the runway and crash in a neighborhood, so it brings down the housing value so you can buy a house. You don't want tragedy to happen, and that condition of the house after an airplane lands on it is probably not going to be that livable for you to get back into. Seemed like it was a movie on that. But everybody just is saying there's some basic things that are just raising eyebrows, and you're not necessarily being negative when you say, hey, be aware, be situationally aware of the finances of the economy. And I'm going to skip all the way down here to this portion. Where do we stand now? In the first quarter of 2022, the housing price to income ratio rose to 95.97, the highest reading since the fourth quarter of 2004. It's still a ways from the 102.64 peak of the housing bubble in 2006. That preceded the 28. And remember, it took 2 years from that point before we crashed. But historically speaking, we've moved into the period where home prices are nearing the limit of what incomes can afford. Again, prices are rising faster than your salaries. It's just what's happening. The last time this happened, home prices eventually snapped back. Well, let me tell you, if a builder wants to build a house, he'll be happy to sell you a $1.2 million house as long as there's somebody out there to buy it. But he doesn't want to sit on that thing. So if people can only afford to buy an $800,000 house, what's he going to do? He's going to adjust the next house that he builds to fit the market that he can get that house sold at. That's all we're talking about. Income's outpacing it with interest going up. It's just going to trim down what people can afford to buy. And when we get that inventory and the days on market stretched out there significantly far, then they'll start compromising on the price. But it's not happening in Middle Tennessee. And if you go to my website, look up on the MLS at a glance and see what the average days on market is. Okay, so here we have home prices are once again out of whack with fundamentals. The higher ratio means home prices are higher relative to income. Just what I just said. Jumping on up there. Where do we head from here? How do we fix this? Martinez Garcia notes that this is a time of fighting inflation, with the Federal Reserve already putting upward pressure on mortgage rates. I think I just mentioned that. Over the past 5 months has sent the average 30-year fixed rate mortgage from 3.11 to 5.09 as the Fed works to rein in price growth. And it's not happening too good. And we can go on through this. I'll let you read this. We've been on this topic long enough. It's an interesting article. It's just someone from the Federal Reserve Bank. It's his personal opinion. It's what he sees. All I can tell you is if your food budget doubled, as mine did, and I don't do anything fancy, mine doubled, my fuel budget has doubled, my propane budget is through the roof. Everything is costing ridiculous amounts of money, and all of that takes away what I could afford to buy if I didn't already have a home. Because that's affecting my income to expenditure ratios. What do I have left over? So it's just going to put some. It's going to be a curve. It's not going to be a sharp downward crash. I don't believe. It's like I said earlier. People will build as much house as they think somebody can afford to buy, and when people stop buying those kind of houses, they'll find ways to trim things back a little bit to start getting prices back under control. It usually won't drop the prices so much of an existing house that just got, whether it's new construction or whatever. I'm saying one is actually built out of the ground and built, CO'd. But it will affect in the long range the size and types of houses that get built in the future. It's all going to depend on builders know what people can afford to buy. And that's what they target. That's who they target. They don't build a house that nobody's going to buy. It's crazy. So we'll just have to keep an eye on what goes on. And like he says, it walks like a duck, quacks like a duck. Probably a duck, but we don't want to call it a duck because we're afraid of jinxing it and having everybody mad at us. So just be situationally aware. Watch my shows. Comment on it if you want to discuss anything. If you're local, we'll grab a coffee somewhere and just sit down and talk about the economy and what you want to do and what I want to do and that sort of thing. So anyway, let's get back to the final segment. Hello, I'm Del Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Del to Sell. That's 1 L and Del, no spaces. Watch the demo on Real Scout, and then call me and we'll set up your exclusive ad-free account today. Now that we got all of that done, let's look at what our numbers tell us today. Last week, 5/27/2022, we had 10,302 opportunities in the Real Scout system. That was up over the previous period. We had 4,432 in the under contract still showing. That was down over the previous period, and the ratio dropped to 43%. Took a 2% drop last week to 43%, the ratio between the two of those. This week ending 6/3/2022, we had 10,827 in the opportunities in the Real Scout system, which was up over the previous period. We saw 4,245 in the under contract still showing. That was a drop over the previous period, and the ratio between the under contracts still showing and the opportunities, the things for sale, dropped to 39%, and that was a 4% drop. That's a big drop in 1 week, 4%. So we're starting to see some inventory available. If you want to list a house, now is still a great time to do it. We see the interest rates might be going up even further, so it might be a good time to sell the house you've got and work yourself into the next one. If you're looking to buy a house, now it looks like it's going to be a good time because interest is probably going to continue to go up. I don't know in the Middle Tennessee area if we're going to see any real meaningful changes in our trajectory. I think we'll flatten out a little bit. We'll still, I think, still be going up, just maybe not quite as sharp, but I don't think we're going down like some of the other cities in the rest of the United States and states in the rest of the United States. I think the metro Nashville area, the MSA of those 9 counties, I think, are still doing well, going great gangbusters. So you know what you need to do: call Dell to sell, but also call Dell to buy. And if you're interested in land, Dell knows a little bit of something about land. Not an expert in it, but he knows a little bit about land. You can call Dell if you're looking for land anywhere, and maybe we can call out some of the things which may not be suitable for your purposes. We appreciate you watching. Have a good, safe weekend.